Hey there, I'm Nicole King. I'm the broker owner of 41 Realty Group in Billings, Montana. Back again with Ian Ullman with Guaranteed Rate. Thank you for coming in.
Thank you.
So we have talked several times about pre-approval, pre-qualification, why it's important, how it's done, timing, all that kind of stuff.
Yeah.
We are not going to cover that in this video.
Okay.
So in the wonderful infographic that is up on your screen right now, the next box is getting pre-approved, regardless of whether you are a buyer or a seller.
Mhm.
So we're not going to go into all the details of that again.
Right.
You can watch the previous videos. So if you just click down in the YouTube connection there, you'll be able to see past videos that are titled about pre-approval and pre-qualification. So definitely watch those. But there's one thing that we really haven't covered in those is that there's really unique options that are available to sellers. People who already own real estate have a set of options available to them as part of that pre-approval process. Right. And that it's really important for sellers before they list their house to go meet with their lender to talk about those options and just also find out what do they qualify for.
Right.
Right?
Definitely.
So what are those options?
Yeah, so there are an abundance. I'll touch on a few that are relatively common in our market or that I'm aware of.
Okay.
And we had a situation just this week where this absolutely became a topic. So with sellers, I mean, the short version is they've got an asset. And for down payment on a home, you can use, generally speaking, money that's borrowed against an asset.
Okay.
Meaning, whether it's
qualifications around that. So generally,
there's definitely qualifications around that, but the general terminology that's used is a bridge loan.
Okay.
Which is effectively where you're borrowing some or all, some of the equity from the old home to use as the down payment on the new home.
Yep.
If you don't want to be in a situation where you have to sell and buy at the same time, or sell, wait, buy.
Yes.
So this would allow somebody to potentially get into the new home while vacating the old home. Makes moving a lot less stressful, I think.
Yeah, it definitely does.
But again, like our situation this week. So Nicole got to learn a new term this week that's pretty much only ever been used for mortgage lenders, I think.
Okay.
Which was a cross-collateralized bridge loan.
Yep.
Effectively, what that loan product would be is if both homes end up, so you have your old home with your mortgage on it, well, there's a new loan that's made, it pays that mortgage off, and as part of that new loan, actually, you use money to buy the new home as well. So they're both under one loan.
So the amount of the loan that's on the old house, the amount of the purchase for the new one is one loan.
Correct.
But secured by both properties.
Correct.
Okay.
And again, an institution here in town used to do them. I know they don't any longer. And so frankly, I don't know of any in town that do that. There could definitely be some.
And lots of federal regulations around that for the reason that not all lenders either offer that or offer
Right. And when you've got a single real estate secured loan with multiple parcels or multiple legal descriptions, that's a whole different realm.
Okay.
So that's that. Okay. A common approach as well is to just do a home equity line of credit on the old home. So you leave the first mortgage on the old home as is.
Yep.
Do a home equity line of credit to pull that equity to use as down on the new one.
Okay.
And the goal being then you get purchased, you get moved. When this home sells, that all pays off.
Yeah.
And you're left with just your loan on the new home.
And a lot of times I feel like the sellers that I've had do that, they either only make like one payment on that home equity line of credit or maybe even two.
Yeah, when you look at the timing of closing and funding and versus when that first payment's actually due.
Right.
Yeah, in a quick moving market, that old home could sell quick enough that they would. It's not like an ongoing payment they would have to deal with.
Right.
But that's very much going to vary by market on how quickly that old home's going to move.
That's very true. And how soon, like in my experience, what we've done is we've listed the house before the new house's closing occurs.
Right.
So it doesn't get listed right away, but there's an overlap. So we gain some time in there.
Yeah. The
other thing is that I think a lot of people when they check into home equity line of credit is shortened HELOC.
Correct. Yeah.
When they check into HELOCs, those are usually, not for everybody, higher interest rate, that kind of stuff. And so they look at that and they go, oh my gosh, that rate is so high, I don't want to do that. Right. But then when we remind them, you're going to have such a short window of time that you're hopefully financing that, and you may or may not actually ever make more than one payment on that. Right. It reduces that, hardship, that seeming hardship for doing that.
Yeah, when you're earning interest, time is your best friend, and when you're paying interest, time is your worst enemy. So the shorter that time is, even at a higher rate, it's not a substantial impact comparative to, if you're making that higher interest payment over a longer period of time.
Yeah. So what are the other options that are available to sellers?
So really, those are the major ones. Interestingly enough, again, this is going to vary by loan program and those kinds of things, but I've had I've had folks even, 401k loans and different sources like that, where
Yeah.
their whole plan is, once this home sells, we have all this equity that we're going to net.
Yeah.
So what route can we go there? And sometimes, honestly, folks just have the savings.
Yeah.
So they just don't have to borrow against the old one. They can just pull from savings for the down payment.
Yeah.
And do that. But again, the most common we probably see is the simultaneous buy and sell.
Yep. Yeah.
Which is, the joke is, are they just sitting with a U-Haul in the parking lot? Because
It
as of the
happens a
time
lot.
of the sale signing,
Yeah.
they don't have a home on paper.
Yep.
And then 20 minutes later, they finish their closing on the new home.
Yep.
And now they have a home again.
Yes. So they can take that U-Haul.
Right, so they can take that U-Haul right to the new home.
Yep.
And so the neat thing with that is, again, because like we've talked about in previous videos, any large deposits, any big movements of funds, we have to backtrack.
Yeah.
And in that case, the sell and the buy are happening at the title companies typically. So the title companies will actually wire that money direct from one to another, or if it's at the same title company, it's already there.
Yep.
So we don't have to do a ton there. We just have to get, prior to that, a verified settlement statement from them that documents, yes, they are selling their home, and yes, this is how much they're going to make.
Yep. Yep.
That's our documentation for the down payment on the
Yeah.
new home. So it streamlines that whole piece a lot.
And then if they're buying and selling simultaneously,
Mhm.
they don't have to worry about the home equity line of credit. They don't have
Right.
to worry about any of that process. It's one closing fee, one everything.
Right,
So,
and like we've
Yeah.
talked about many times, that's where having that right real estate team,
Yes.
where your agent, because at that point, I mean, you've got potentially 4 agents. You've got the buyer's agent and the listing agent on your old home.
Yep.
I would imagine they're using the same agent to buy their new home, but not always the
we
case.
hope so. Yeah.
And then the listing agent on that new home.
Yep.
And so communication with all of those interested parties to go, okay, we're going to be homeless for about 15 minutes on paper.
Yeah.
So actually coordinating really
Yes, all
the
of
move
it.
outs and the move ins, because a lot of people don't understand, as of that signing, recording, and funding, that's no longer your home, and your
Yep.
things shouldn't probably be in there.
You cannot leave your stuff there when you go to closing.
Right. So those conversations all need to happen with your real estate agent
Yeah.
and the listing and buying sides both.
So, as you guys can probably tell from the conversation, lots and lots of moving pieces when you are selling a home and planning to buy another one, but so many options available. Make sure whoever is part of your real estate team, your real estate agent, your lender, your financial advisor, and your tax professional, that you are very sure that they're all communicating, that they're running all those options past you to figure out what is the very best solution for you. So we will see you guys in the next video as well.